Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Good afternoon and welcome to the weekly Golden Nugget that happens every single Wednesday at 12:30 Eastern Standard Time. We got our primetime spot back. I appreciate everybody that shows up on the legendary Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Drew Wolfer Twitter, the Verified Investing Twitter, wherever it is that you are. We appreciate you for showing up. Seriously, we would not have a platform without you. So much love to you all. I have a very surprising and maybe shocking revelation and prediction for where the gold markets may be going, and it's probably a lot contrarian to all the things that you're hearing from everybody else. So stay tuned for that. We're also going to answer a couple of questions from last week, the people in the comments section. Thank you for asking the questions. We'll do that at the end of the video. So stick around to see if your comment was answered. To anybody that has any questions, drop them in the comments section this week, and I'll be happy to go through them next week and see if we can answer your question as well. Now, if you are here for the first time on the Golden Nugget, and thank you to the people that are here every single week, let's tell you what the Golden Nugget is. So first and foremost, we are going to do the commodity compass, which tells you everything that's happening inside of the metals markets and the broader financial markets. Then we're going to do my favorite segment, which is called the Golden Nugget, right? So what is that segment? It is where I give you a Golden Nugget from my training that I brought out in conjunction with Verified Investing called the Golden Opportunity, that teaches you exactly how I built an 88% plus live and tracked and documented win rate. And then we will get into, you guessed it, a special segment that I'm not going to tell you exactly what it is until we get to it. And then it's what you came for. Everybody comes for the braids, but they stay for the trades. And last week we had an absolutely monster trade, okay? And we will do the silver snapshot first, where we do TA on silver, tell you what went well last week, what trades hit, what didn't, and then we will do gauging gold, okay? And that's where we'll do the exact same thing, just on gold. Then we'll talk about the economic calendar and answer everybody's questions. So without further ado, let's just get straight into it, shall we? So let's pull up our outline and we will talk about the commodity compass first, okay? Now, what's happening inside of the gold markets? Well, gold did rebound amid kind of risk-off moods, but it's also facing a little bit of a headwind. It's a little stronger than what we thought, right? Because the dollar is rebounding. We've now got a hawkish Fed from the meeting, right? And, you know, the Federal Reserve tone on interest rates, right? So we saw gold prices rebound about 0.9% this week. Now, gold's been kind of, we'll call it what it is. It was a little boring this week, right? It was a little boring this week, but silver went crazy. And that's why you have to also pay attention for the silver snapshot, right? Now, we did see a sharper drop in the previous week's session, but we've obviously rebounded from there. So that pullback, it's a lot tied to the US dollar hitting 3-month highs, okay? Which it's US dollar still way down comparatively. Like if you when in doubt, zoom out, right? But that's pressuring gold's non-yielding, appeal, okay? Now, at the same time, the Fed just had a recent meeting. They did cut interest rates like we thought they would, 25 basis points. No surprise there. If they would have done 50 basis points, that would have been a surprise. But they did not hint at another cut in December, okay? Now, we also have the government shutdown happening. Now, the shutdown is the longest that we've had in a very long time. It's in its 36th day, and it's making it its longest in U.S. history, okay? Now, behind the scenes, bipartisan talks are happening, but Trump is still indicating that he is not negotiating until they open up the government, okay? Key services are now under strain, and what are those services? The Federal Aviation Administration, they're literally warning of potential U.S. airspace closures due to staffing shortages among air traffic controllers and federal employees that are basically working for no pay. Now, let's get into the Golden Nugget, okay? And I want to talk about something that we talk about, and there's a whole strategy around this inside of the Golden Opportunity. So if you want to know how to trade, you want to know how I built my 88% win rate, you want to know how we kill it every single week, every single day inside of gold and silver, get into the Golden Opportunity. I cannot stress that enough. You are going to learn so much. There's dozens and dozens of students in there, and if you want to know how I'm doing it, that's where you're going to see it. Now, I want to get into the charts really quick, and I want to show you what is called the FRVP, and I want to talk about key levels, okay? So I just gave you a spoiler on our silver trade. That's fine. Drew's king of the spoilers. We know it, right? So this is what is called an FRVP. I'm going to take this trend-based Fibonacci off of here really quick. That way we have a really, really clean chart. We'll even take VWAP off so you can really see everything perfectly, right? So this is what is called an FRVP. This is a fixed range volume profile. And what this is telling you is that whenever you have a big move like we had here, right? You can measure from where that move started to where that move ended, and then it'll give you all of the volume that's inside of there. Now, there's key levels inside of here, right? And as you can see, this yellow line right here is called the point of control. What that means is that's where the most volume in this entire range was traded. This whole thing right here is called the value area, right? So this is the value area. This is the value area high, value area low. Now, what I want to illustrate to people is a lot of times whenever you come up here and you deviate outside of here, you're coming right back to get snapped in, and then your first likely place to go is going to be that point of control. Now, if you lose that point of control, bearishly backtest it, you're probably coming down to the value area low, okay? And then once you deviate outside of the value area low, especially if you get an SFP of some lows, right? Some previous lows, and a bullish divergence, you're probably going to be coming right back up here to the point of control. So these are key levels that are not only inside of this, right? But they are also inside of what is called the SVP, which I really like this. The SVP gives you all the sessions every single day. So it'll tell you the value area high, the value area low, and the point of control for every single daily session. So if we just scroll over here and we go to today's session and we zoom right in, right? I'll show you. As you can see right here, we can see all of the volume that has been traded, and the point of control for today is right around $47.73. We've regained it. We're now rejecting from the value area high, and that's where you kind of got to zoom out and see if you see we rejected from the value area high of yesterday as well. So that is just something that I really like to illustrate for people. All those key levels, these are the things that I use every single day inside of my trading, okay? And there's a reason for that, and that's because these key levels, time and time again, they just get hit and hit and hit and hit, right? So understanding value area high, value area low, point of control, volume profiles, that's something that you will learn in such abundance inside of the golden opportunity that it will level your trading up to an extent that I can't even describe it to you in words. Okay, now let's get into our third segment. This is going to be called the market movers. Okay, so we have geopolitical and policy risk. We have China now reshaping the way that retail gold sales look like inside of their country via tax changes. Okay, and this could be a problem, right? China did tweak its long-standing tax exemption regime, and this is for retail. Okay, retail gold, and a state bank has actually halted new gold production enrollments inside of China. So this is kind of like going to affect potentially demand inside of the gold markets. So given that China is among the largest consumers of gold and the largest holders of gold, a change in their tax and regulation regime can actually reduce demand for gold, okay, which is a structural backdrop for a potential correction. Now, there's no guarantee that that correction comes, and I'll give you my surprise price prediction here in just a little bit, but it could be a slippery slope for, bullish gold narratives, okay? Now, on the contrary, we do have a major M&A, which is a merger and acquisition inside of the mining space, right? And I always botch these guys' names. Coeur Mining is now to acquire New Gold Incorporated. That's C-O-E-U-R, Coeur, or whatever it is, right? So they announced that they're going to buy New Gold in a definitive agreement now, okay? Creating a new North American kind of senior precious metals producer. Now, this is a big deal, and I'm going to tell you why this matters and how this can affect gold, okay? So first and foremost, this is going to be a masterclass, by the way, so let me just smash through this. Then we'll get into the silver snapshot, obviously, the gauging gold, right? Supply side impacts could potentially look like this, okay? When mining companies start to consolidate, right, and M&A, right, merge and acquire each other, they often restructure operations to become more efficient, and this could reduce duplicate costs, okay? Shutting down less profitable mines and focus capital on higher yielding assets, okay? And what I mean by that is like higher producing mines. This can either reduce supply, right? If unprofitable mines are actually closed, which could support higher gold prices, or this could increase production efficiency if the merger leads to, better capital deployment, and then that could actually support lower production costs and potentially increase supply, which then puts price pressure on gold to the downside. Now, big deals like this, they often are going to reflect the mining industry's outlook on future gold prices, okay? You're probably not going to acquire other gold mines unless you think gold is going to be a really high yielding asset in the future in terms of from a company's perspective. We know we're not going to get a yield on gold, but they can get a yield by investing and then pulling gold out of the ground, right? So they're not going to be investing in these companies majority of the time unless gold is in a good position to continue appreciating into the future where they're going to get an ROI. Now, I just want to go over kind of how could gold go up in this scenario and then how could it go down? Because all that matters is the price of this thing, right? Now, gold could go up if the market interprets this deal as a sign of long-term bullishness on gold, like what we were just saying, and then reducing future supply could be expected due to consolidation and previously unprofitable mines being shut down. Now, gold could go down, okay? If the merger leads to cost efficiencies and increased production output, bringing more gold on the market, right? And then that could be a supply shock, right? To the downside for gold. And then broader economic forces like stronger dollars, higher interest rates could continue to dominate this, right? Now, let's get into what everybody came here for. The trades, baby. Let's talk about the silver snapshot first. So let's get into the silver chart and I'll show you exactly what is going on. So I know I had my spoiler up just a second ago. That's the spoiler, baby. That's the spoiler. If you all remember, if you were here last week, you remember we took this trade last week. We made like 7% on this trade. And then guess what we did? We found and identified the bearish divergence down there, the double tap of the value area low and the 1.786 fig, bam, bam. And then we just took it right back up and killed it, right? So then what happened? Well, it's pretty simple. We came up here and now we are in a short. So on this long right here, okay, this is the short that hit, okay, and that we're profitable on. But then we had this long right here that finally we got our full take profit. We hit this right here. So what was the profit on that? Well, you guessed it. It was right around 7.5%. It was an absolutely monster trade. We absolutely killed it on silver last week. And as it sits right now, we're killing it on this trade. And you're probably wondering, Drew, why do you have this trade still open, right? Even as it sits right now, we're up 2.83%. Now, I want to show you why I still have this trade open and why we haven't taken profits here. I want to pull up just the 200 moving average really quickly. As you can see, we're struggling right here. If we regain this, we can probably go ahead and close this out. So just watch that 200 moving average on the hourly chart. But what I want to show you is a market structure kind of teaching really quick. So as it sits right now, here's what you're seeing inside of silver, right? You've got your high, you've got your previous low, right? You've got your new high or your new highs right here. And then you have your new low right down here. Okay. Then you've got your new high, you've got a higher low, then you had a higher high. But then guess what happened? You cracked that low and you set a lower low. Obviously, you set a new lower low here. Okay. And then guess what? This would have been your high, right? Then you cracked that high, you set a higher low. Then you cracked that high, right? Higher high. But then what did you do? You cracked that low. So right now, we have a market structure shift to the downside, which is why this trade is still open. Now, if this trade cracks this high up here, you definitely want to stop out in profit before that, right? So you would stop out either right here at the point of control, or you would stop out, sometime once you get above that 200 moving average. But obviously, this is our target right down here, the value area low, and that 1.786 fib. So let's talk about what actually we can look for this week. The trades really, I'm going to be honest with you, they haven't really changed much, right? They really have not changed much, and I'm going to show you. So we're going to short down here at this 1.5 fib if we lose it. Are we going to get down there anytime soon? Probably not, but I always keep the trade set up for people. You can also short down here at the 1.618, which is where your previous high was, okay? And then we've never back tested it. We have not back tested that. Obviously, we back tested this 1.5 back here, and it was like a triple top kind of resistance before it became a nice little triple bottom support, which was actually a triple tap Wyckoff, but you know, that's a really advanced thing that we don't probably need to talk about right now. Then if you get a bounce after you lose this 0.618, this 1.618, if you short and you come down here, you're just longing right down there into support, okay? And then you could ride it right back up to the 1.618. You reclaim that, you could start longing all the way back up to the 1.786 fib and the bottom, which is the value area low. Now, if you lose that value area low, we got to create a new range, obviously. But, you know, that's something that we'll get to whenever the time actually comes, right? Now, if you get all the way up here to these all-time highs, and say you get an all-time high, you gain all the moving averages, you got to get a new all-time high, no swing failure pattern up there, and then you get a back test of this 2.236, we would like to see, boom, a nice little bounce up there. Secondarily, right down here, if we get down here again, we're going to take this trade all over. The one that we were talking about that we hit last week, we're just going to take this trade all over again at the value area low and the 1.786 fib at about $45.82. That's where we would be longing, right? Secondarily, if we get above this 2.0, we've been trying to get above it. We've been talking about this for weeks, right? We even had like an inverted head and shoulders here. I was hoping, oh, it might play out, and then bam, right? But luckily we were already in our short, so it didn't matter for us, right? Secondarily, if you come up here and you top out and you get a swing failure pattern and a bearish divergence at this high, you're shorting. You're absolutely shorting it right back down. Secondarily, you have a second opportunity to get in, right? If you don't get all the way up here, there's a potential that you just reject right here at the 2.236. We're shorting there. That's very simple. And then obviously this is the one that hit. You know, if you come up here, you reject, you can ride that bad boy right back down all over again. And then we have the obvious one, which is if we don't bounce here, we lose the 1.786. We are now shorting. So let's get into the gauging gold segment, and let's talk about, you know, gold really, let's call it what it is. Gold was kind of boring this past week, right? Gold was a little bit boring, not gonna lie. And these are the trades, right? Let's talk about the trades that we have set up. So we've got this parallel channel way down here, okay? Now, if this thing starts to intersect this 2.236 fib, which is the 3657 region, this is going to be mega long city, baby. This is going to be mega long city, okay? And I am looking for that. I am looking for that to come somewhere in, you know, I mean, it's going to take a while for that to come, but it'll probably be somewhere in December, right? It'll be like at the beginning of December, something like that. So this is where you are longing. Secondarily, if you front run that, right? You could be front running that where you long down here, right? And you say, okay, you know, this is where we start thinking about longs. And honestly, once we get that long, I mean, we're riding that thing back up here to, you know, probably this previous range. I mean, this would be an absolutely insane trade. You can set your stop loss here. You got a 7.5x risk to reward, right? Secondarily, if you took this trade last week, that's fine. We didn't actually get we set our trades up in a very specific way, okay? And we did not get all of our parameters met. Now, could you have played this trade and then, you know, been profitable down here? Yes, you could have, but I only take the trades if it fits our exact parameters. And what were our parameters? Well, you short the 2.618. But before that, you have to have a new low. We did not get a new low. We still haven't got a new low, right? We did not get a bull div, right? There was a bull div down there. We did not want to see a bull div, right? We did not get an SFP, so that's fine. We know that we didn't get a bull div or an SFP, but there was no new low, so we couldn't get there. We did retest, and we never really rejected, right? Like, we never really rejected. We just kept getting above it, and you never got your rejection. So if you took that short, that's fine. You did make money, but probabilities were not on your side, so we did not take that trade. Secondarily, you've got 3 chances up here for swing failure patterns to happen, especially with bearish divergences at these 3 nice little highs right here. And then we obviously have the 2.618 and this right here. If we come up here to these all-time highs, we could SFP this and absolutely rip downwards, right? And your price target's going to be somewhere down here. So you got to watch for your SFP and your bearish divergence up there at the all-time highs. We remember the 2.236 down here. We could front run this parallel because now we're back in the parallel. We're rejecting from the parabolic parallel, right? We could be running right back up, and then secondarily, we are longing once we get above this. But again, we never got this entry. We never got this entry. We just got sucked right back down into it, got above it, sucked right back down into it, sucked right back down, sucked right back down, sucked right back down. It's just, frustrating on gold. We did not get any trades last week, but we will see what's happening for this week. So as it sits right now, there's only a couple of things that matter inside of gold, right? And that is this low right here and this high right up here, right? We would like to see this high get cracked. So we cracked right here, boom, right? And then we have not come up and actually cracked this low. So there's two places that matter, right? And it's right here, and it's right here. Everything inside of here is just chop, right? And we need to see one of these levels get broken. So you break this level to the downside, you come back test, boom, you're shorting. You break this level to the upside, boom, you back test the 2.618, the $4,000 region, and then bam, you are longing, right? And that's what we want to see is this bad boy right here, okay? We would like to see a break above here, boom, bam, and then we are longing, right? So let's get into our next segment, which is going to be the economic calendar. So you're probably wondering what happened last week. Let's do a quick recap. The S&P manufacturing beat this past week. It rose to 52.5 from the previous 52.2. It's a modest uptick, nothing to write home about, right? ISM manufacturing went down from 49.1% to 48.7. This was a pretty decent loss on the median forecast, which they were forecasting it was going to go up, and it went down, right? They were forecasting 49.3%, went down to 48.7. Not good, right? The US trade deficit did come in and it was negative 61.5 billion. And then ADP was actually reported this morning, which is employment data, with 42,000 jobs beating the 22,000 forecast and absolutely smashing the previous month of a loss on jobs of negative 29,000. Now, tomorrow, 8:30 a.m., we have jobless claims coming in, initial jobless claims, potentially. We will see. Friday, we have the unemployment report, the unemployment rate, and the hourly wages. Okay, then we have consumer credit report at 8:30 a.m. and 10 a.m. is the University of Michigan sentiment, the preliminary, right? Their forecast is 53, whereas last month we got in the data was 53.6. So they're, forecasting that it's going to go down. Now, if it goes down more than that, it's not going to look good. Then we have CPI next Wednesday at 8:30 a.m. All right. So now that we've gotten through that, let's get to our two questions. And thank you to the people that actually asked these questions. So first question, regarding the RSI divergence technique at 6 minutes in the video, our last week's video, does that mean that the TLT is in danger of crashing because the double top, the RSI is in decline, and both are present on the hourly chart, just like gold pre-crash? So let's go ahead, let's share it. And you actually kind of called it perfectly, my friend. So thank you for asking this question because this gives us a really good kind of teaching point to show people. Absolutely, you are right. Price is going up. RSI is absolutely crashing out, right? And then bang, look at that precipitous fall, right? The same exact thing happened on gold. Let's look at the RSI. You're absolutely correct. RSI in a divergence, price rising, and then bang. Absolutely precipitous fall. So yes, you're absolutely right. Here's the thing that I want people to understand. Charts are charts. Technical analysis, it's just technical analysis, right? So if you're going to see that on something like iShares 20 plus year treasury ETFs, right? You're going to see that in gold, you're going to see it Bitcoin, whatever it is that you're trading. Technicals are technicals. That's the beautiful thing about the charts as a technician, right? Now, our second one is, person said, thanks. Do you see gold inside of a nice parallel channel starting from the first top? That's funny that you actually say that. I try to keep my charts as clean as possible, but yeah, I absolutely do, man. I absolutely do. And let's delete this stuff out of here. Let's get RSI off of here and I'll show you. We absolutely do. So where are my parallels? I know I already had it on here. So there was a parallel right there. So yes, you are absolutely correct. We did see it in a parallel. Here's your top hit. Here's your top hit. Here's your bottom hit, bottom hit, bottom hit, bottom hit. Never got breached. And then guess what happened? This is what we teach inside of the golden opportunity too, my friends. We literally came down here. We got back above it. Perfect back test. Boom. Long city, baby. And then you tested the top end of the parabolic parallel that was going up. Perfect take profit. Perfect entry. Perfect exit. Everything looks beautiful on that. And then you have like a nice little secondary parallel that's happening right here, right? We can draw that just really quick, and then we will sign off of here. Where's my parallel channel tool? Bang, bang. You got a nice little parallel right here too, right? Look at that bad boy. That thing is beautiful, right? So really what we want to see is a breakup above $4,062. That's why I'm saying if we break up above here, we break both parallels, we break the trend, we come back down, we test the 2.618, we are long city for big gold prices. I don't think gold is going down. There's a big, massive buying opportunity on gold at $3,657. My prediction is that we are not going below $3,657. We're at $3,960. That's a $300 kind of dip, less than 10% on a correction. It's not even really a correction, right? Then I think we are going to see gold going to $5,000 sometime in 2026. Silver, if it can regain that bullish momentum, silver's probably going to go to over $60 relatively quickly if gold starts pumping up. Those are my predictions on gold and silver as it sits right now. Obviously, we have to have some serious parameters get met in order for that to happen. But whenever I see people going out saying, oh, gold's going to go down to, I don't know, $2,500, $3,000, I'm just like, you pull the fibs, man, and I just don't see it. You pull the parallel channels, I don't see it. You pull the supports, I just don't see it. Worst case scenario is like $3,657, maybe $3,500. And then I think best case scenario is we just reclaim 4K right now because we're really bullish and we're really close to it. And if some of this economic data starts coming out from the government shutdown, those could be the key catalysts that put us above $4,060 and then a retest of 4K. And then we're just mega bullish on gold right now. Technically, from a technical perspective, I know people are like, oh, we're in, a downtrend or whatever. We're not. And I'll show you really quick if you want me to. This looks like it would be a downtrend, right? But if you know basic market structure mechanics, you know that we've actually broken market structure to the upside. All we're waiting for is a break of structure above that level right here at $4,046. And we are continuing to now go back up. We've already broken this downtrend as it sits right now on the hourly chart, on the 2 hour, the 3 hour, the 4 hour, the 8 hour, right? The 8 hour, you haven't broken your downtrend, but from the smaller time frame perspectives, we've already broken that trend, right? And the further you go up, say, the 4 hours kind of where it starts to get wild. This is your low, this is your high, this is your low, right? You still haven't cracked your high, right? So you got to come up here to about 41.51. And, as it sits right now, we just got to break up above here on the hourly chart. Then it'll start trickling up to the 4 hours, the 8 hours, the 12 hours, the daily charts, things of that sort. But if you look at the daily chart, I mean, it's still, this is still a relatively small pullback in terms of, the run up that we have had. So I don't really see gold going much further down than about right here at this 2.236 fib at about $3,657. So I appreciate everybody so much for showing up. Make sure you drop your comments and your questions in the comments section below. I have an 88% win rate for a reason. I'll be glad to, give you predictions. I'll be glad to do the technical analysis. I like doing technical analysis on a daily and a weekly basis. I don't like predictions as much, because as you can see, if you go look for my win rate, a lot of times we're in and out of these trades within, hours, days, things of that sort. So does it really matter if gold's going to $5,000 if we can make 100% profit trading the $3,900 to, $4,200 range? I don't think it matters, right? Unless you've got your long-term gold bags, which you should have anyways. I will see you all in the next video at 12:30 Eastern Standard Time for the Golden Nugget. Have a wonderful day, everyone.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.